Good evening, everyone, and welcome to today's topic. And today's topic is a very interesting one. It's a market is at all-time high, and strategies for traders and investors. And we have got two interesting speakers. One is Mr. Bramesh Bhandari, who is a proficient stock trader for 15 years. He trades using GAN and Astro methodologies. So he trades shares, he trades forex, commodities. It will be very interesting to talk to Bramesh. So our next speaker is Mr. Ankit Kanodia. He's a SEBI registered investment advisor and co-founder of Smart Sync Services. He believes in long-term compounding and he started his own financial education platform business of his own in the name of Mission Smile. So welcome both of you. So before I start, I would like to give you a very quick disclaimer about this event. Investment in securities market are subject to market risk. So read all the related documents carefully before investing, and representations are not indicative of future results. So all discussions are purely educational in nature and are in no way an advice and recommendation. And today, also we might be speaking about stock sectors. So before you take your decision, please consult your advisor. So these are all academic purpose, right? To increase our knowledge, to learn something. So now, guys, you know that market is an all-time, almost literally at all-time high. Nifty, it's around 18,500 above. It closed today. And BSE Sensex is around 62,000 plus. Bank Nifty at an all-time high. So it's a very interesting thing to see, right? So in fact, I will be asking questions to both. And also, all our listeners, please feel free to ask your question in the chat box. Anything you want to know about sectors or the stock, your views, please feel free, go ahead and ask in your chat box. So my first question is going to be a fundamental one and a little bit fundamental one. That is why I'm going to ask Ankit. Now, see, if you look at the global economic situation, in fact, in last week, I have seen here the report from IMF that the probability of recession, Europe, America going into recession has become more and more. So again, we know that the interest rate hike cycle is continuously going on. So what is there in India when all the global markets are not that bullish or correcting, but Indian market is, literally at an all-time high? What is that difference? Why it is so? Ankit? So in the meantime, I'm continuing with Bramesh.
Thank you, Neeraj, and thank you, PTM Money, and hi everyone. Thank you for tuning in. Hope you get some value out of this session. So, speaking about taking your question. So, what you have told is, Indian markets are outperforming. The main reason for that is, recession is coming, but recession is there in US and Europe. Europe because of the, the power crisis, because of the Ukraine and Russia war, and US because they have been in the tightening cycle. Now, when it comes to India, if you go, India is growing almost like 6%, year on year basis. And, if you've seen 1 year down the lane, the interest rate in US now at the current juncture is 5%, and home loan interest rate in India is around 8 to 9%. So the differential is coming less. And more importantly, we have the economy is, self-consuming. It's a consumer, our economy is consumer based. So basically, what is built within or what is produced in it's consumed by India because of our, because of the young population which we have. Now, having said that, why market outperform as compared to the US and other markets? The simple reason being, market looks 5 to 6 months in advance. So even if there is a recession coming in, so I have a very good, interesting study on that. So whenever there is a recession in US, generally the emerging markets, including India, will outperform. If you see here in 2000, we got a recession, and after 2000 to 2001, we got a big recession in US. And whenever the US Fed start lowering the interest rate, the biggest beneficiary is India. Whether you see 2001, 2002, or 2008, after that 2009 was the biggest outperformer in Indian markets. And similarly, when this taper tantrum and everything happened. So generally, whenever there is a recession in US, India will always, because of the cheap money which is flowing in, and we have the quality here. We have all the things which, and with the current government with all this PLI schemes and everything, so economy is standing on its own, and this is a big benefit for India. And more importantly, if you've seen the quarterly results also, whether Reliance, SBI, they've given the best, highest ever quarterly profits. So, we are here to stay in long run. But having said that, once this outperformance which we are seeing now, this will also get neutralized over a period of time. When the US market start outperforming, we will start underperforming. The cycle will keep going on. But one thing which I've seen is whether index is at all-time highs, there are a lot of portfolios who are still down 20, 30% from their highs. Because this rally which we are seeing is mostly in the Nifty 50 stocks. We have not seen is, going down to small and mid cap stocks. Probably once we get a valuation richness in the large caps, then we will the cycle on the small and mid caps will start. So it is just for the number sake we are seeing all time high, but I think portfolio.
Bramesh, your voice is not audible.
Uh,
Uh,
am I audible now?
yes, yes, you're audible now.
Oh, okay, okay. So that's what I was saying. Like mid caps and small caps outperformance. I mean, they have underperformed a lot. Like 20-30%, 20% mid cap and small caps are down from the all time high. So probably once the valuations on the large cap will start reaching that level, and the mid and small caps will start outperforming, and then we'll see the real all time highs in the portfolios of the individual retail investors also. Yeah, that's about
Okay,
it.
great, great. Okay, now I'm coming to Ankit. Ankit,
Neeraj, am I audible now?
okay, you are audible, but your volume is still less, but I think we can go ahead.
Yeah. Thank you, Neeraj, and thank you, Team Paytm, for inviting us. As you were talking about recessionary fears, so I'll just start with a very cliche that more money is being lost waiting for the recession than in actual recession. So, of course, there are recessionary fears in Europe, in US, and India is now a very well connected market. So, of course, the fear, or because not just the market, there are several Indian companies which cater to the European and the US economy. So we will also face that heat.
I
But
have
it is.
lost Ankit. Ankit,
Uh, am I audible now? Hello? Hello? Can you hear me now?
Yeah, Ankit, we can hear you.
Okay, great. Uh, so, so what I was saying is that of course Europe and US are in a recessionary zone, and India's economy, and there are several businesses in India which cater to the US economy and the European economy. So that pressure will be felt here. There is no doubt about that. However, it is very difficult for any investor to pinpoint when the recession will come and what kind of impact it will have in the market in the short term. So it is always better to know about the businesses you want to be invested in and see how they are getting impacted. Listen to the management commentary, attend the con calls, try to figure out from the ground how things are going on, rather than focusing too much on the macro picture. Right. So macro, I'm not trying to say that macro is not important. Macro is extremely important. But the problem with macro is that when we try as investors, when we are thinking for the long term, if we try to act in the short term based on the macro things, then we miss the big picture. Just to give you a very good example, is in 2020 when the COVID crash came, it looked like the world will take a lot of time to get out of it, right? But look at the swift recovery, not just in the market, but in terms of how quickly we adapted to the new world, and we kept on working again. So that is why it is advisable to, if you are an investor, and I agree with Bramesh ji, what he said, that right now, even though the market looks to be at all time high, but it is only because of the index. Uh, all the portfolios which are predominantly invested in mid cap and small cap stocks, they are easily down 20-30% from their previous highs. So, uh, and apart from that, we should be focusing more on the individual stocks and sectors where we are interested or where we see value, rather than focusing on the all time high or all time. Of course, it's good to see the market as all time high. It gives you a boost and a confidence, but apart from that, we should not look at it too much. That is my point.
wonderful. Thanks, thanks, Ankit. Next, Bramesh again. Bramesh, we have seen a good rollover in last series in our FNO segment. And do you think that this bull run or whatever sentiment we have seen, it's going to continue in the month of December also? Are we likely to see 19,000 plus by 2022?
Mm, See, generally what I'm seeing is when the market comes near its all-time high, Nifty per se, it is 18604 is the high Nifty has made on 19th October 2021. Now, generally what I've observed is with these kind of rallies, and if we keep going like what we have been doing now, it is not good for the market. So basically, what we should see is around 18,600 to 700, we should see some kind of profit booking which should bring index down towards 18,300 to 18,200 odd levels. And then we should start the rally, probably what we call it the Santa rally or the Christmas rally, and we should be all the way towards 19,000 plus by end of December or till the second week of January. Now, having said that, one number which I'll watch out for, 18,629 is the number which I'm watching out for. And if Nifty is able to close above it on a weekly basis, then my target for the index is around 19,683 by March of 2022. That's the in short what I'm seeing in the market. And on downside, 17,576. If you are a index trader, that is a level which we are watching out for this current uptrend to get over. Uh, yeah, that's about it.
Okay, great. So you mean to say we can expect some kind of a correction? There's a strong or some kind of resistance that is being seen overhead,
Yeah, yeah. So
and we can
pullback
see some.
is yes, pullback is very much required. I mean,
Mhm.
there are two things which happens in pullback. First thing is, the weekends gets out of the market and the froth which is falling. I mean, speculative positions will keep start building in the market. So they will also, take a breather. And when everyone thinks that the market is going up, that is where, the market will have some kind of profit booking. Profit booking is very, very mandatory.
Okay. Now again, we'll be shuffling between technical studies and our fundamental aspects as well. Now coming back to some macro situations. So when it comes to consumer price index, we have seen that it has eased a little bit, you know, to six, eased a little bit in the month of October. Retail inflation, um, it is a touch 3 months low of 6.77% in October from around 7.41% in September. Now, do you think that the rate hike which basically to control the inflation, it's going to continue, or we are coming towards an end of the rate hike cycle? What do you think about that part, Ankit?
Yeah, so we have this philosophy at Smart Sync Services that
Mm-hmm.
don't predict, prepare, right? So we are not in a business of predicting what kind of rate cycle. Rather than we would always like to look at individual industries and businesses and see how those businesses are performing in those kind of scenario, and try to get hold of those businesses where rate hikes uh, are either not going to affect them much, or they have some sort of a pricing power or sort of advantage where they can mitigate the problems which can happen due to rate hikes. Having said that, uh, inflation, according to us, when we talk about the global economy and all, looks like it is still not under control. However, don't we don't want to sit on this point and invest based on this. Our point is that if we can find in businesses which can still do well in terms of in an environment where inflation is high, we will still be very good as investors. Let's go back in history and see one of the biggest bull market in India came between 2003 and 2007, and inflation was really high at that point of time as well. It kept on increasing at each and every level, but still the market kept on going up, right? And there was a huge wealth created in those 4 years, right? So that is how we look at it. Rather than focusing too much on the rate cycle, uh, we want to focus on individual businesses, and then try to take a call on that.
Wow, Ankit, I really appreciate you said something very nice. Don't predict, but prepare, right? Now, what do you see expected the GDP rate growth, Indian economy growing? Of course, we are heading towards $5 trillion. India is a sixth largest economy, fifth or sixth largest. And how do you think it's going to grow in the coming years?
Again, I'll not put any number here. However,
Mhm.
what we can see when we are talking about macro and when we talk about, see, there are two, three things which we broadly need to look at. There is a stable government in place, and there has been a lot of macro policy on macro policy front. We have done a lot of things right, and right now we have got a scale where as an economy we have become much more matured and got some scale. So now we are in a very sweet spot. However, if we again go back to the history and see, there have been several times when it looked like this is going to be the India's decade, we have this tendency of doing something wrong. So don't get too confident or overconfident on these things. As an investor, you should always be more balanced rather than being over optimistic, right? However, if you look at some of the things which government has done in terms of the Aadhaar linkages, in terms of bank Jan Dhan bank Yojana, and then there are this UPI system which is helping the economy, and then don't forget the ease of smartphones in the smallest part of the country, plus uh, cheap internet available. So these things open up to a lot of opportunity to all of the people, and that will lead to a lot of rise in consumption and also in terms of new business opportunities for many people. So from that perspective, India is on a very strong wicket. Of course, due to global recessionary fears, there will be hiccups. It cannot be a straight line all along. However, if you are an investor, even now, in fact, as an investor, we always believe that the best time to invest was yesterday. The second best time is today, and there is no third best time.
Wonderful. Wonderful. Okay, my Bramesh, I'm going to come to you for this question now. Of course, as you said in last time, yes, the market is at an all-time high, but when it comes to small sectors, small mid-cap sectors, they're still, 10, 15, 20% down. So do you
Mm-hmm.
think that there are some sectors, there are some sectorial indices, mid-cap, small-cap, which are attractively poised at this point of time to get into for 1 year, 6 month kind of a perspective, or maybe, active investment perspective?
Mm-hmm. See, uh, instead of going, I mean, yeah, definitely there is value. I mean, there is wealth created. There is bull market going at a single at any point of time. There is bull market going somewhere in the market. Now, what I feel is SME sector or the SME platform, the stocks which are listed under SME platform, they have tremendous wealth which they can create, and they have tremendous potential. There will such beautiful stocks. I mean, which are present there, both from the technical and fundamental perspectives, where there's a lot of wealth can be created. And I'm mostly because the elections are coming now. I mean, probably now 2023. After that, the election, this thing will start. So the theme, I mean, once we'll have the budget, which is on 1st February, the theme should be something related to the agriculture stocks. So they have very good stocks like KN Agri, USC seeds in SME sectors, and all the fertilizer stocks, which should be on the radar. And second thing is, I mean, I've seen, I mean, this rally has the power stocks or the and power stocks have not at all contributed. So there are a lot of good power stocks which are also available. So this is something which we can again like IEX, I mean even Tata Power, which can be a part of the index also, and NTPC. So these are the stocks which I feel that there is value to be created, and a person can get invested with a proper stop loss and proper exit mechanism. But there's a lot of value to be created. I mean, probably we'll get the budget ready, and agriculture stocks should be on the radar.
Okay, great. Again, when we are talking about discussing about sectors, I would like to again reconfirm the point that these are purely educational, and these are before you make an investment, please discuss your investment advisors. Now, again, from fundamental perspective, Ankit, which are the sectors that you would like to look for from 1 2 years investment perspective?
Sure, Neeraj. So first, I'll give a disclaimer. We are SEBI registered investment advisors, and the sectors which we'll be discussing now, we might be having some positions in some stocks in there. So please assume that we are biased and vested. So take it with a pinch of salt. Having said that, uh, now we have been very bullish on the travel and travel related sectors since the pandemic, because we found a lot of value when those stocks were butchered. Their earnings were not there, but we found that the balance sheet was extremely strong, and the valuation uh, was very, very, very cheap. However, if you look at the last 2 years, these sectors have performed specifically in the last 1 year. While the small cap and mid cap index has barely done anything, but these stocks have done pretty well. We continue to be bullish on them, even though the valuation right now is looking a little stretched. However, we believe it's a long term theme. Uh, that is one. Second is we are very bullish on the affordable housing finance scheme space. And we believe that is also a space where there is a sustainable growth available uh, for the companies. Of course, you have to pick and choose which is the management you want to bet on. And some of the stocks over there have corrected from their 52-week highs. So we also believe that even the valuations are pretty reasonable. However, we would not like to comment on individual stocks in the sector, because we also have position in some of them. So these are the two sectors. Apart from that, two sectors which are not doing well in the last 1 year, where we are interested and we are evaluating. One is technology sector, and the other is pharmaceutical. So pharma, traditionally we have very low weightage on pharma. However, this time we are trying to increase our weightage over here, and we are looking at a few companies there.
So when you are talking about technology sectors, it's basically IT companies, right?
Not just IT companies, there are IT platform companies. There are companies which the new age companies which got listed last year. There was a
Hmm.
lot of froth and euphoria while listing, and right now nobody is looking at them. So there are a few companies where we are interested now.
Hmm.
So we'll be looking at them. Yeah.
Okay.
Again, I would refrain from taking names because then people take it as a recommendation.
Okay. My Acha, there are some listeners who have raised questions. So one is Mr. Dheeraj. So what it means when we are going to witness another crash or it's a start of a bull run? So I think he wants to know basically right from the scratch. So
Okay.
what it means we are going to witness another crash or start of a bull run. I would like to ask Bramesh for that.
See, if you go by the history of the world markets, I mean, basically US and Indian markets also, crash happens once in a decade only. Like last time it happened in 1992, Harshit Mehta scam, and after that we had 2001 bubble burst. Then we had 2008, and then after that there was, I mean, not a crash but a big correction in mid cap and small cap in 2012, and a small correction in 2016, and then we had the big COVID crash. I mean, which was just like for a month only. So, crashes doesn't happen, every now and then. But what I feel is, if you go by the Gann cycles, around, we can get a minor blip or a small correction, which we like more than 20%, like we just fall down 20% in 2022, but we bounced back quite sharply. So I feel like around after elections or just before elections, we can have a small dip in the market. After that, probably around 2028 or 29, where we can see some big corrections in the market. Corrections will not happen so often. We just had a COVID crash, and US markets have seen a great value erosion, just like I mean, more than 2001 COVID thing. So you will not see these kind of corrections so often. But having said that, always look at the stocks which you want to invest in. There will be correction. There is a bull market in some sectors. There is a bear market in some sectors. So focus on that individual stocks. Or if you are just trading an index, then just go for that Nifty ETF. Whenever you have a correction of more than 2, 3, or 5%, keep investing in them. It is as simple as that. You cannot time the market to the precisions every point of time. Once in a while, once or twice you can be lucky, but every time it's highly impossible and improbable.
So what you are saying, Brahmesh, is that when we are talking about a good significant correction, probably we can expect it after election, and basically your whole outlook is basically kind of a bullish kind of an outlook, isn't it?
See, as if you are in stock market, generally the stocks only go up. I mean, you go by the history. So there will
Yeah.
be blips. Yeah. So so at the end of the day, you have to be, I mean, bullish when you are into equities. But having said that, yes, there will be corrections. There will be times where you can put the money at, and when the valuations are quite rich, and it's always prudent to take money out of the table and again invest when there is a dip in the market. So generally, if you go by the cycles, like 2001, there was a crash. Then in 2007, we had a big crash. Uh, and after that, it was like 2008 that the big 50% crash. I mean, that was the biggest crash in Indian markets. So if you go by the same thing, like around 2025 or 26 is where you can see a small dip. And then around 28, 29, where we can see that big crash in the market, which
Okay.
everyone is waiting for. But when it comes, halfway to, I think 90% of the people are invested in the market. So
Okay.
it's yeah.
Now, again, this question is for Brahmesh. Rajiv has asking a very interesting question, and it's a purely astrological question. So
Mm-hmm,
he's asking, asking like Brahmesh sir, Jupiter Saturn being direct now, will it
mm-hmm.
result in up moves in liquor sector, specifically United Spirits?
Uh, Generally, there is more on the banking, and and Saturn is generally for the metals and metal stock. So basically, for alcohol or liquor sector, it is basically Venus, which impacts a lot. So and I don't feel that there is a big bull run which is coming in this sector at the current juncture.
Wow, that's interesting. Venus for liquor sector, it's a Venus,
Yeah.
and for metal and banking is a Saturn, right?
No, no, no. Jupiter is for Saturn, and for
Acha.
metals, yeah, metals. Anything which requires a lot of hard work is always Saturn.
Okay, metal for Saturn and banking for Jupiter, right?
Correct, correct, correct.
Okay, good, good.
Yeah.
Now, again, Ankit, fundamentally, he's talking about metal and banking sectors. Now, lots of buzz. Banking sector is making an all-time high. What do you think about the banking sector from fundamental perspective?
So the Neeraj, post the COVID crisis, predominantly all the banking stocks got a lot of beating, and there was a lot of NPA issues because of COVID. So primarily because of that, the whole banking index was trading at a very reasonable valuation. So that valuation is now getting corrected. So now we are seeing that valuation inching up. However, we are not in a business of taking a 1 year, 2 year call. That's why we are not having a very positive view on banking from here on. As I mentioned earlier, we are more focused on uh, affordable housing finance company or gold finance companies or some of the platform companies. But banking is something we are right now not very bullish on. However, the stocks may continue to do well for some time because of now it being recognized by the market, and it can continue in the current momentum. However, from the longer term view, we are not very bullish on that. However, that is our own personal view. Don't take it as a recommendation. Secondly, on metals, we generally avoid cyclical stocks because cyclical stocks are those stocks where you have to be very right both the times, at the time of entry and at the time of exit. So rather than betting on metals, we focus on those businesses where there is no cyclicality involved. So I would not be very positive on metals also, not because it will not do well, but because it is extremely difficult for general layman investors. So it is very difficult to bet on metals, as in time them.
Okay. In fact, the government has made some remove some kind of duties on the metal sector, right? In last
Yes,
3 4 days.
yes. So that these things are very good point to give you a sense as to what is the current mood of the market or how the stock can do in a very short period of time. However, fundamentally, if you talk about it, there is so many things involved in metal companies. The main reason, if you take steel, uh, all over India, whoever whatever steel companies are available today, you have to figure out not only what is the demand and supply situation in India, but all throughout the world. Because if there is something which is happening in China or US or Europe, that will also impact the steel sector in India as well. So there are a lot of moving parts when you cover these kind of cyclical sector. We believe a retail or an individual investor are better off not betting on them, because oftentimes history says that people buy in euphoria and then get stuck in these stocks. People who are the people who understand the sector well, have a very good understanding with the management. They follow the sectors for a long period of time. Only those people are better off investing in this sector. That is our advice for common investors.
Okay, I will come a little bit later for some more sectors. But for the next question, I'd like to go to Bramesh. Ramesh, so we have seen that FIs in the month of November, they have been net buyers. Uh,
Mhm.
Whereas for last so many months, we have been seeing that constantly they have been selling, 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 except in the month of August. So do you think that it has reversed now? The FIs are going to be buyers?
See, what has happened is, FIs have sold almost like 95,000 crores of equity in last probably till August. And if you go back to the history in 2008, the crash which we have seen, it was just 40 or 50,000 crores of selling by the FIS. Now, thanks to everyone who's listening to this calls, probably I think most of them are invested in SIP or they're into the markets, and they are able to absorb the selling of the FIS. Now, what happens is, these are institutional players, and they have to have some weightage of particular market in their portfolio. Now, what has happened in India is, because whatever selling they have done, it got absorbed, and we saw a maximum correction by when we made a low of 183 on 17th or 16th of June. We have corrected almost 20%. So generally now, as if the world markets and throughout the world, if Fed stops raising I mean, if they give a hint that they will stop raising the rates, and probably if the recession hits in US and they'll start reducing the rates, that is double benefit for India. So I feel like they have done the selling, and now it's time for them to, I mean, because at the end of the day, they have to take an exposure and they have to purchase stocks. So eventually, this has been kind of, they have sold their holdings, and the prices have not come down, the prices are rising. So definitely they have to take an entry into the market. And and as you can see in November, because once they get a feeling, and once their analysts say that yes, the Fed will stop rising or the pace will start reducing, they will start again investing in the emerging markets, particularly India. So yeah, the theme will start reversing now.
Okay, okay, great. Bramesh, there's a question for you from Chetan. Uh,
Mm-hmm.
okay, now this is Pawan, question from Pawan with respect to PSU banking sector rally. So he's asking, will the rally continue?
See, the rally has just started as of now. Yes, the wealth destruction which we have seen in last few years was quite humongous. Like PNB, Bank of Baroda, and all these stocks. I mean, they saw very very big correction. I think PNB made a high, because today PNB was in news, and I mean not in news. Like we have seen some, I mean the highest ever turnover in a particular stock is in PNB. So PNB made a high of almost like 280 in 2010, and after that it has fallen all the way till 20 odd rupees. And if you see last few years, it made a high of just 231, and it made a low around 26 odd rupees. So it has just doubled from the base. But if you see from the 240 odd levels, the price is nowhere to be gone. So I feel like there is still wealth to be created, and with the cleaner balance sheets, which thanks to the government, they have taken the proactive steps. The balance sheet is quite cleaner, and they have been process which has been set up. And I have few friends in PSUs, and they tell that they are working in par. The work culture has become in par with the private banks. So yes, there is a lot of wealth which can be created. And if you see here, the public sector PSU index of the market, PSE index, it's breaking out of its 15 years high. So yes, I feel there's a lot of wealth to be created. Every dip needs to be bought, because I remember, I think in 2015 or 16, when Reliance was coming out of its breakout zone, it has also seen that kind of volumes So I feel like PNB, Bank of Baroda's, Union Bank, UCO Bank, all these stocks, it should be on radar. Not at the current juncture. If you see a dip, try to grab them. Yeah, yeah, that's it.
So for PSU banks, the team is buy in dips, and
Correct,
it
correct,
probably
correct,
could be
correct.
a. What about private banking sector, Bramesh?
Mhm. Private sector, see basically if you see here, private sector we have like ICICI Bank, which is almost is all-time high, and we have this HDFC Twins. So once this, I mean, they have that merger, it gets over, then we'll know the combined strength of the entity, and most of them are near this all-time high. See, what happens is when it comes to stock market, I have a theory of like supermarket mentality. Now, what is that? Like if you go to a supermarket or any mall, you get buy one get one free and all that stuff. You generally like those kind of offers and you try to grab them. But in market, what works is the quality will become more expensive and the cheaper will become cheaper. So when a stock is making new all-time highs, or when a stock is breaking out of a monthly it's giving a breakout on a monthly time frame, these are the times where you buy it, not when the stocks are falling. So yes, as PSUs are making a comeback, and private banks were already at all-time high. So the I mean the weightage will shift more to the PSU banks. But yes, if you want to invest only in private sector banks, I think HDFC, ICICI are on the large caps, and Bandhan Bank and RBL Bank, which is also seeing some kind of breakout. If your risk allows, you can take an exposure to them.
Very good.
Yeah.
Ankit, next question is for you. In fact, it's from Vashwant. He's asking about green companies. Now, of course, the one of the team of the government is going green. Anything that green is being promoted. So, what is your take on this particular sector, and any stocks that you would like to, academically, go and invest?
Sure. So, green company or green is a very good theme from a long-term point of view. It has a lot of backing from government also, and overall the world is also moving towards that. That can be seen in terms of, if you can see, I was just looking at some data recently that if you look at the kind of solar power is getting used, and when you compare it how it what was the percentage 15 years ago and what is now, there is a huge increase in that right now. So solar related companies are good. However, we always believe in investing in businesses where there is some sort of a moat or some sort of a competitive advantage. So that is why uh, it is not very clear as to which ones are the companies where you should take a long term call. Since you have asked to name a stock, I would stick my neck out and name a stock. However, I'll again make a disclaimer. This is a stock which we hold in our portfolio, and it should not be taken as a recommendation. Indian Energy Exchange is a very, very, very good beneficiary of this green revolution, because you would see a lot of renewable energy being used incrementally from here. And the kind of PPA agreement used to be happening in case of coal and thermal power, that is not going to happen in case of these green. And they will find it much more convenient to buy and sell on exchange. And this is a dominant exchange in the energy sector, and they have been doing pretty well. Of course, stock prices move up and down because of demand and supply. 1 year ago, everyone was gung ho on that business. Today, because the price has corrected 50%, many don't find it attractive anymore. However, we believe we have been researching, covering, and holding on, and even buying at every. We believe in SIP, doing SIP in our long-term portfolio. So we have been buying through SIP over the last 2 years, and we continue to remain bullish. I'll repeat the disclaimer. Just because we are bullish and we have this stock in our portfolio, we don't recommend it to anyone. Please consider it as a educational discussion.
Exactly. And we also request all of you to discuss before investing. Please consult your investment advisor and take your decisions accordingly. Ankit, next sector, Koshak is asking, what about hospital sector?
Yeah, so hospital sector is also doing really well, and I agree that some of the hospital companies are, even after the run up, are looking very interesting. Other way of looking at the hospital sector is we can probably look at some of the ancillaries who provide. I'll not take names here, sorry, but there are some of the ancillaries who are very small, tiny companies, 200, 300 crore market cap company, which can do really well from here on, because if the hospitals do well, these companies should also do well. That is our point of view. And hospital as a sector, we continue to like. Of course, we don't have any holding as of now, but we are very positive on that sector as well.
Wonderful. In fact, both of you, Bramesh Bhandari and Ankit Kanodia, we are coming to an end of this program almost. So before we finish it, to fundamentally, your advice to investors, Ankit, how do you advise them to go ahead?
Sure. So I can only speak about the philosophy we follow in SmartSync services. There are different ways of making money in the market. I would not want you to blindly copy or follow what we do. However, we would always say that what has worked for us. We believe in knowing few things and knowing them well. So, in a when you are a fundamental investor and taking a long-term view, there will be so many times when prices will go 50% up in a short period of time, or may crash 50-60% in a very short period of time. Only your conviction in a company, in a management, in a sector will work then. And it is impossible to have conviction in, say, 15 sectors. So always play to your strength, understand a few sectors, and play around that, and have a diversified portfolio. However confident you are on individual businesses, admit that you will make mistakes, and sometimes unforeseen scenarios will come, like COVID happened in 2020, which nobody could predict. So those things will always happen. May have a reasonable expectation, and invest regularly and invest for the long term. Thank you so much, Neeraj.
Great, thank you. Bramesh, your final words, astrologically, technically about the market in the coming, you can talk about next 1 to 3 years or even 4 to 5 years perspective.
See, I mean, on a longer term, the markets always go up. But if you are a trader, I mean, you need to have a different mentality as compared to investors, because here the goal is not to stick to your positions. You make money, you make entry, you make money, or you take losses. So only thing which I will advise everyone is protect your capital and keep your losses small. Then only you can survive the market if you are trading. And if you are investing, please go by the words which Mr. Ankit ji has shared. And from the market perspective, I feel like, we will get a correction. It's not like that we will keep going up, keep going up. So what I feel is, till budget, first or second of December is something which we can top out in the current rally. Then we can see a small dip, and for 1 or 2 weeks, and then we can get that Santa rally, and it can go on till second week of January. And just before budget we can see some profit booking, and then after, based on the budget, we will see the next further direction of the market. I mean, predicting for 4 years is very simple. The market will go up, but as a trader, you have to, if you are especially trading in options, which I believe most of the people do these days, is you have to time the market properly. And if not, you can lose a lot of money. So have the mindset of protecting your capital, keeping your losses small, and keep waiting for the opportunities, based on whatever trade setup you follow. And and stay disciplined, and there is a lot of money to be made here. That's about it. Thank you.
Wonderful. So nothing to, if you are an investor, nothing to worry. The market goes up and down, but in the long term, market always goes up. If you're a trader, it does not matter whether the market is at 60,000 or market is at 30,000. You have to protect your losses and ride the profits, right? So thank you, both of you, Brahmesh and Ankit. Wonderful talking to both of you today about technicals and the fundamentals. And of course, thanks to all our listeners, and keep do joining us. And that's what all from our side today. Thank you, everyone.
Thank you,
Thank you.
everyone. Thank you.
Thank you, Neeraj,
Have a good time.
Paytm, and all the participants. Thank you so much for listening patiently. Thank you.
Thank you very much.